It is 8:41 a.m. Pacific Daylight Time. It is the 26th day of September 2025, and this is episode 1177 of Bitcoin and... Well, we might be looking at a hard fork. But I want to caveat everything we talk about when it comes to this supposed hard fork, that we should all be taking anything right now with a grain of salt. This is still not 2017. We are not there yet. All right. So also the information that I'm about to impart to you, you need to take it with a grain of salt as well. Just everybody calm down. For those people that are understanding exactly what the hell I'm talking about, we all need to calm way down. This is becoming a little bit ridiculous. It has been a little bit ridiculous. It's now escalated into a little bit more ridiculous. But that's not all we've got to talk about today here on Bitcoin and I am your host, David Bennett. I do hope you're having a wonderful Friday. We're going to get you into the weekend with some more news from, well, BlackRock. Well, yield. It's all about the yield, guys. They've got a new Bitcoin product that they want to release. We'll talk about it. And then U.S. regulators are having a little bit of beef with Bitcoin Treasury companies. Seems there may be some chicanery going on. I love all this news. In fact, there's one of the larger companies in the space, and not a Bitcoin Treasury company, by the way, one of the oldest Bitcoin companies getting sued. I don't have a lot of information on it because the only news about it is from a law website that I am not going to pay for a subscription for, and archive.ph cannot get past its paywall. So I have almost no information on this. So again, take it with a grain of salt, for the love of God. China's going to be in the news. Digital yuan seems to be on pace. We've got a little bit of inflation news out of the United States. And then we're going to rock on over to talk about a piece from Frank Corva out of Bitcoin Magazine about protecting peer-to-peer rights. There is a call to action that I want to read to you. Deutsche Bank is in the news about Bitcoin specifically. They've released a very long, lengthy report looking at both gold and Bitcoin, and they're not poo-pooing Bitcoin. And we'll get into that one. UK finance pilots a tokenized sterling deposit. Yes, I know. The UK is ramping up to their version of a CBDC stablecoin. The way that they're looking at it, I can't see the difference, but hey, it is what it is. And then we've got a Bitcoin miner in the news. Cypher is working with Google. We'll get into it. But first, let's get the big, giant, crappy ass elephant out of the way. Okay. This is Lola Leitz from The Rage. That's her outfit. And she dropped a pretty much of a bombshell story about Luke Dasher and hard forking Bitcoin. And I want everybody to take a deep breath, close their eyes, and meditate on the fact that, well, she's human. She may be wrong. She may have taken things out of context. Maybe she's right. The fact of the matter is, ladies and gentlemen, we don't know. We're not going to know for a long time as to exactly what the hell's going on. But for those of you who saw the Lola Leitz piece and haven't read it, I'm going to read it for you right now from The Rage. And Lola Leitz leaked Luke Dasher plans hard fork to, quote, save Bitcoin. Yes, gonna save Bitcoin. There has been an ongoing dispute between supporters of the alternative node implementation, Bitcoin Knots, and the supporters of the reference client Bitcoin Core. The dispute originally evolved out of Core's consideration to increase the op return size in order to prevent non-monetary transactions from using more harmful methods on the blockchain, such as data in unspendable outputs, while Bitcoin Knots proponents argue that non-monetary data, first described as spam, has no place in Bitcoin, and that core developers should not optimize for it. To combat said spam, the Bitcoin Knots client, maintained by Bitcoin Core contributor Luke Dasher, implements what is described as filters in which transactions which communicate non-monetary data are kept out of the Knots node's mempool. Over the past year, the discussion around Knots filters has grown increasingly out of control, as the narrative changed from protecting node operators from spam to protecting node operators from hosting child sexually abusive material, also known as CSAM. An argument that is technically unfeasible as long as node operators continue to run any node that follows the current consensus rules, as all nodes must host the same data once a block is approved. In private messages shared with The Rage, Dasher now appears to conclude that policing the mempool is insufficient to stop nodes from hosting theoretical CSAM. Instead, he proposes the implementation of a multi-sig quorum on Bitcoin that grants a designated group of people the ability to retroactively alter data that is hosted on the blockchain. Pausing to remind you, let's not get ahead of ourselves here, and let's make sure that we get as much of information from different sources as we possibly can before we start coming to any conclusions as to whether or not that particular statement is in fact the case. All right, so again, deep breaths, calm down. I've been through this before in 2016, 2017, and 2018. All right, that was basically the ramp up, the peak, and the ramp down of the Bitcoin block size war. And it was awful. It was absolutely awful. However, because many of us have been through that before and we saw it unfold real time because we were there, this one, it doesn't hurt so bad. In fact, I'm almost unfazed by it, and I really think that if you're nervous or if you're feeling some kind of anxiety about it, we are not there yet. All right? So we are not there yet. Continuing, by Dasher's description, the Trusted Multisig Committee would review transactions and replace any data it identifies as CSAM with a zero-knowledge proof. Node operators could then remove said data from their nodes, altering their version of the blockchain while continuing to be able to prove that the transaction that contained the affected data is valid. Quote, and I'm going to pause right here to say that these quotes are coming from the quote unquote leaked screenshots of Luke Dasher's discussion with somebody else, right? Which is problematic. It's already problematic that we have all these screenshots of this private conversation that Luke Dasher had with somebody else, and it's problematic for two reasons. One, if it really is from Luke Dasher, then it's private information that has been released to the public, probably without Luke Dasher's permission, and that is private information. That's a problem. Two, I can't confirm that it came from Luke Dasher. However, it does seem that other people are saying that, yes, it is in fact from Luke Dasher. And one of the people that's closer to Luke Dasher is saying, yeah, this was a discussion that we had. It's kind of crappy that it was released like this, but hey, it is what it is. But we're not actually talking about a hard fork. There are many facets to what's going on here. And picking And thinking that you know what the hell's going on is absolutely the wrong road to travel. You must hold yourself in abeyance and just wait to see what happens. It's very important. So this quote that I'm about to read is from, and all these other quotes are actually from these leaked screenshots of this private conversation from at least Luke Dasher, supposedly, and somebody else. And that somebody else, I'm not sure who it is. I think it might be Mechanic, but again, I don't know. I'm at that, what I just said, I'm talking out the side of my head. So hold it all in abeyance and just be calm. Quote, right now, the only options would be Bitcoin dies or we have to trust someone, Dasher writes. The proposed solution would require a consensus change activating a Bitcoin hard fork. End quote. In follow-up messages, Dasher reveals that public letters are being drafted by third parties to seemingly support the sanctioning of illegal content on the entire Bitcoin network. On advice of Ocean's lawyer, the mining pool founded by Dasher, the Knots team decided that it is better if the letter not be perceived as coming from us. And that is another quote from this exchange. When asked for a comment by The Rage on the proposed hard fork, Dasher asked, quote, "You're writing an article on completely unfounded lies?" And there's an actual question mark there. Dasher had no further comment for The Rage. Dasher's proposal raises immediate concerns on altering the permissionless nature of Bitcoin, effectively invalidating the blockchain's inherent censorship resistance. If the trusted committee enables node operators to remove CSAM data, it also gains the power to remove any other form of data it deems unfavorable. In effect, Dasher's proposal could place node operators at risk of criminal penalties for non-compliance with the committee's request for the removal of data. By setting the precedent that transactional data can be retroactively altered via a trusted committee, law enforcement may begin to demand censoring entire transactions they deem illicit, arguably opening the door for the enforcement of KYC/AML. As Dasher anticipates in the shared messages, the handling of illicit activities on Bitcoin is an active debate amongst policymakers, miners, and pool operators alike. The authenticity of the material we received was verified via video proof. For transparency, we are sharing the relevant messages we obtained below. And then that's the end of the article, except below is like I don't know, 3 or 4 screenshots of this, and I'm going to say supposed discussion that Luke Dasher had with whoever the hell it was. I find this rather problematic. There's a couple of things here. Again, it's a private conversation that's been published. I'm not sure that that's the way to go here. I don't think it's proper. I really don't think it's appropriate. However, who the hell am I to say, whatever? I'm just want everybody to understand that it doesn't matter whether this was proper or improper. The information that has been released needs to be looked at pretty severely. One of the things that was said, according to this piece and according to this supposed conversation, is that Luke Dash Jr. is basically saying, look, man, if somebody decides to put in a picture of, CSAM or something like that into this transaction and Bitcoin picks it up as a valid transaction, so therefore everybody's going to carry this, then is there a way that we can remove the data but still have essentially the transaction, the monetary part of the transaction still in place, and use something like ZK proofs to do that? It's possible. It's not impossible to truncate information off of a transaction the way that Luke Dasher is talking about, but still have the valid monetary inputs and outputs that are necessary for the blockchain to carry forward. All he's wanting to do is take away the parts that he deems as spam or CSAM or irrelevant or non-monetary, whatever. That part, it really is a big whatever. I still don't like that because it is censorship. And once you plant that seed, those beanstalks grow, dude. And they grow into things that you probably don't expect. You can't really guide where a beanstalk grows, right? So the other thing that's bugging me about this is that just because Luke Dasher had a discussion with somebody about the possibility of a hard fork doesn't mean that he's actually planning a hard fork. So what does this all tell us? This is fog of war. Nobody really knows what's going on. Nobody can say definitively whether or not Luke Dash Jr. is actually going to do this or not. But let's just take it to the extreme. And Luke Dasher is in fact planning a hard fork of Bitcoin, and that his version of the hard fork of Bitcoin will literally have censorship on it, and a committee of people will look at each and every individual transaction, which is, it probably would be used more like AI would go through and scan the transactions and look for something as, deemed as non-monetary, and then flag those for, further review by, I guess, a committee of peers. And then they take a vote, and then they decide to remove that. However, if it is a monetary transaction or contains a monetary transaction material in it, then that would be kept and the rest would basically be done with. If you're talking about a hard fork, you're talking about a completely different chain. Even if let's just call them the transaction headers that have the actual monetary data in it, even if they remain the same and the hashes still come out to be all the same, great. Okay, fine. You've got the same blockchain. However, it would be a different kind of hard fork than anything that we've ever seen before, because the two chains would actually line up. However, one would have censorship and the other one would not. However, the one that would not would contain material that, well, could, from Luke Dasher's point of view, since he's all about CSAM right now, land you in prison. This is bullshit. It's not that it doesn't exist. It's not that CSAM. I've got a node in my back room right now. It has CSAM on it. I know it has CSAM on it. I haven't seen it because I'm not going to go look for it, but I know it's there because we've talked about this for years. Back in 2016 through the years 2016 through 2018, we had this thing called rare pepes. This is before Taproot. This is before ordinals. This is before SegWit. This is before inscriptions and all that bullshit, right? I wasn't, but people were putting these things called rare pepes on inside Bitcoin transactions, and they're still there. And they're little cards of the Pepe meme, and they're pictures, right? But they're there, and they've been there since 2016. I think there's like 3,000 of them, and it was a big deal. In fact, the rare Pepe thing is one of the things that brought down one of my favorite Bitcoin podcasts in the early days. And I can't remember the name of it right now, but if you know who I'm talking about, then you know who I'm talking about. But those pictures are there. And that was before any of this stuff, any of the Taproot, any of the SegWit, any of the ordinals. For Luke to suggest that they would be able to completely dismiss this data that would be put into the op return, because that's what Core wants to do, is just take the limits off of how much data you can shove into an op return in a transaction. we were putting stuff inside of Bitcoin transactions long before anybody even thought about raising the limits of op return. This entire argument at this point is so overblown that it's causing nothing but fear, and everybody needs to take a step back and relax. This is nowhere, we are nowhere close to the block size wars of 2016, 17, and 18. Nowhere close. And anybody that tells you we're close either doesn't know what they're talking about, wasn't there, or is straight up lying. We are not there. Everybody calm down. We've got other things to worry about, like BlackRock pulling this out of their ass. BlackRock chases Bitcoin yield in latest ETF offering as a sequel to IBIT. Braden Lindria from Cointelegraph has it. Asset management giant BlackRock filed to register a Delaware trust company for its proposed Bitcoin Premium Income ETF on Thursday, signaling a push to broaden its Bitcoin offerings. Bloomberg ETF analyst Eric Balchunas said BlackRock's proposed product would sell covered call options on Bitcoin futures, collecting premiums to generate yield. So it's an ETF on call options on futures, and if they win and get a positive yield out of it, that will actually go to the people that own shares of the ETF. That's sort of what they're talking about. So it's gambling wrapped in fixed income. Yay! The regular distributions would, however, trade away potential upside from investing in BlackRock Spot Bitcoin ETF, which mirrors Bitcoin's price movements. Quote, this is a covered call Bitcoin strategy in order to give Bitcoin some yield. This will be a 33-act spot product sequel to the $87 billion IBIT, end quote. Registering a trust filing in Delaware typically indicates that the ETF issuer will imminently file an S1 registration statement or a 19B-4 filing with the Securities and Exchange Commission to officially kick off the process. U.S. regulators, particularly the SEC, have signaled openness to a wider range of crypto investment products as part of Donald Trump's promise to make America the crypto capital of the world. The new BlackRock product would complement its iShares Bitcoin ETF, which has clocked over $60.7 billion in inflows since launching in January of 2024, by far the largest of its kind, with the Fidelity-Wise Origin Bitcoin Fund coming in next at $12.3 billion. One of the earliest reasons why many TradFi investment companies overlooked Bitcoin is that it isn't a native yield-generating asset. However, solutions have popped up, such as one of Strategy's convertible preferred stock offerings, STRK, which leverages its 639,835 Bitcoin to offer investors stable income. If approved, BlackRock's proposed product would add to the few prominent yield-generating Bitcoin products in the United States. It sounds to me like they don't want to be left out. Balchunas said that in light of all the other coins about to be ETF-ized, the filing shows BlackRock is opting to build around Bitcoin and shitcoin number one and lay off the rest, well, at least for now. Quote, this makes the horse race for these other coins much more wide open, he said. Potential approvals may start coming in quicker, too, with the SEC last week approving a generic listing standard that wouldn't require each application to be assessed individually. So we've got BlackRock is about to launch a yield-generating Bitcoin ETF that is based upon essentially gambling on the futures market. Please don't even think about buying this. It's here's what really raises the hackles on my neck is the fact that they're doing it at all while Bitcoin treasury companies are having their asses handed to them And we'll get into some more of that. There's a lot of wreckage that is about to occur, especially on the long tail end of these new quote unquote Bitcoin treasury companies. And it probably is a good time to start by getting this story from Reuters. U.S. regulators probe stock moves before companies made crypto treasury announcement, according to the Wall Street Journal. U.S. regulators have examined sharp movements in the stock prices of companies before they announced plans to raise money to buy cryptocurrency for signs of potential insider trading and disclosure violations, the Wall Street Journal reported on Thursday. The Securities and Exchange Commission and Financial Industry Regulation Authority, or FINRA, have contacted some of the more than 200 companies that announced crypto treasury strategies this year, the report added, citing people familiar with the matter. Okay, so 200 companies have been contacted by the SEC and FINRA. That's almost all of them. In fact, that's kind of all of them. Although they said announced crypto treasury strategies this year. Well, that wouldn't include strategy. And I think it's possible that Metaplanet is outside of that scope. I'm not exactly sure, but at least strategy escapes that particular ramification there. Let's continue on. SEC officials warned firms about possible breaches of rules against selective sharing of material non-public information, the journal said. The SEC has declined to comment, while FINRA did not immediately respond to a request for comment. Many publicly listed companies have been buying cryptocurrency, seeking to replicate the success of strategy, formerly known as MicroStrategy. So what is this? Well, if you go and look at a couple of these companies and you mark the day that they made the announcement that they were going to actually start buying Bitcoin or whatever, and you look at their stock price the few days before, and I haven't looked at all of them, but I've seen a couple of examples, you see a trend, and there is significant buying of that stock that was essentially flat. And all of a sudden, there's this brief rise of the stock price, and it stays risen until the day that the announcement is made publicly. So if I know, even if I'm the guy at a company and I make the decisions and everybody's got to listen to me or they're fired, and I make the decision that I'm going to announce on Thursday that this company is going to start buying Bitcoin and we're going to do a Bitcoin treasury strategy, and not a single other person in that company knows yet. And I start buying my own company's stock, and then I release the data. I'm guilty of insider trading, even though I've never told anybody. See how that works? Because I knew it was going to happen, because everybody has to listen to me or they're fired. I call all the shots. I don't have a board of directors. Let's just pretend that it's that simple. I'm the only one that knows, and I start buying my own stock in the previous days before I tell the company and the rest of the world Bitcoin treasury strategy. I'm guilty of insider trading. I could be thrown in prison. I'm certainly going to be fined, right? So now we expand that to the actual world, the way the real world works. There's more than one person that knows these companies are going to do that, and they're all insiders. And a lot of these people looks like they were buying stock the days before they made the announcement public. They're not supposed to buy any stock until the second they make the news public. As long as they've released the news publicly, you can start buying stock and it'll be fine. That's not the case here. And these guys have sent, the SEC and FINRA have sent out 200 communications. It's probably going to be ugly. But we're not done yet. Bitcoin Magazine, well, not the magazine itself, but the Bitcoin BTC Inc. and BTC Incorporated is being sued by a Swiss firm. Now, I tried to look at any other news article that I could find about this. I've searched high and low. I've searched everywhere that I can. The only thing that I can find is this. I think it's like law.com article. Yeah, law.com article. And it's behind a paywall. So here's the only thing that I can tell you about what's going on here. Swiss firm sues Bitcoin media company BTC Inc., citing $150 million fraud. And then the only part of the article that I can see is this. A Swiss digital asset firm has sued the Nashville, Tennessee-based operator of Bitcoin Magazine, accusing it of fraudulently inducing months of strategic consulting and introductions while never intending to follow through on promised merger. So BTC Inc. is being sued. I have zero sources that has looked at this particular law.com article and pulled it apart and then redisseminated it for public consumption. So what I just told you is all that I know at this time. So and what's odd is that the Swiss are suing a Nashville-based a US-based company. I don't know. So we don't know what's happening here. But Treasury companies are getting weird, right? With the SEC stuff. The Swiss are suing BTC Inc., which includes Bitcoin Magazine as well as the giant Bitcoin conference. Right? And iBit wants to release a brand new Bitcoin ETF. And more Treasury companies continuously are saying that they're putting, I saw like two announcements yesterday that even more of these Treasury companies are coming. So it's a very dirty world out there, which is why you need SoapMiner. SoapMiner.com, handmade tallow soap. Do you feel dirty? Well, you can get away clean with SoapMiner.com. He's got all kinds of nice soaps, and they're all handmade, and they're all 100% tallow. He's got Comfrey tallow, so if you are a gardener or you're always ending up with abrasions and like small cuts and scratches doing whatever it is that you do, consider Comfrey tallow soap because it heals those small abrasions, bruises, bumps, stings, things that you get while you're working in the garden or doing, maybe you're a mechanic or something like that and you get scrapes. Don't use it on deep cuts. Comfrey heals skin and abrasions and stuff so fast that if you get a deep cut and use Comfrey on it, it can close the wound over the deeper wound, and that can cause problems. So if you got sprained ankles, if you've got like abrasions, bruises, cuts, small cuts, bee stings, wasp stings, stuff like that, use Comfrey tallow soap from SoapMiner. He's also got Earl Grey. He's got goat's milk. He's got lemongrass. He's got all manner of flavors. It's not on his website yet, but SoapMiner has just released a line of tallow deodorants, which I haven't tried yet because it's not on his website. But use the code Bitcoin and get 10% off your entire purchase at soapminer.com. That's soapminer, all one word, .com. Bitcoin and is the coupon code. China launching International Operations Center for the Digital Yuan out of Atlas 21. On September the 25th, the PBOC officially inaugurated an International Operations Center for its central bank digital currency, the Digital Yuan, in the financial hub of Shanghai, according to South China Morning Post. PBOC Deputy Governor Liu Li described the initiative as part of the historical inevitability in the evolution of payment systems with the goal of building a more efficient, inclusive, and globally accessible cross-border financial ecosystem. Quote, looking ahead, the PBOC will continue to support the stable and sustained development of the International Operations Center for the Digital Yuan, providing strong backing to facilitate cross-border trade, investment, and financing, Liu Li stated. The launch of the center marks another step in the broader strategy to integrate the digital yuan into the global economy, and this push towards adoption of China's CBDC comes at a sensitive moment as the government takes a stricter stance on tokenization. Earlier this week, China's financial market regulator asked several brokerages to temporarily suspend their real-world asset tokenization activities in Hong Kong. The cross-border payment system, based on the digital yuan, will explore the use of the ECNY in international trade transactions. Quote, this project helps strengthen China's influence in the global financial system and provides a Chinese solution that is open, inclusive, and innovative for improving the global cross-border payment system, said Tian Wan, president of the National Institute of Financial Research at Tsinghua University. For years, China has worked to internationalize the yuan while simultaneously testing the digital yuan through domestic pilot programs. During these trials, the ECNY has been used for retail payments, government disbursements, and salary transfers, as well as public transportation fees. You're too late. Tether's going to take it all over, dude. It just is, and I'm not singing Tether's praises. I'm just telling you the reality on the ground. Tether already won. Tether already won. Let's run the numbers. Let's start out with this. Got a report here from Reuters. Steady U.S. inflation data reassured Wall Street, leading to gains on Friday, while Treasury yields stayed largely flat and gold firmed on expectations that the Federal Reserve may continue cutting interest rates this year. U.S. consumer spending rose slightly more than expected in August, while the inflation rate rose from 2.7% from 2.6% in July, in line with economist expectations. So that news dropped. So the interest rates, or rather inflation, is in line with economist expectations. So therefore, all is good and everybody's happy and more rate cuts are coming. And that is sort of guiding today's market action. So what is the market action today? Well, oil is doing very well this morning. Brent North Sea is up 1.5 to 70.48. West Texas Intermediate is up 1.74% to 66.11. Natural gas is doing its thing. It's the only one down today, 1.83% to the downside. Gasoline is up almost 2% to $2.04 a gallon. And Merbon crude, everybody's favorite light sweet crude, is up 0.83 to 71.72. So energy seems to be making a brief comeback. Palladium is, well, all metals are doing well today. Palladium is up 2.6%. Gold is up almost a full percent. Looks like another new all-time high, $3,808.01 for gold. Platinum is up 3.25%. Platinum has been on a tear lately. And if you don't know anything about platinum, it's heavier than gold. It actually has more industrial uses than gold, and yet it still trades on a per ounce basis at $1,579.70. It has been ripping lately. It's actually been leaving gold and silver behind in the dust. And speaking of silver, it is up 2.6% to $46.28. Ag is fully mixed this morning. Biggest winner is lumber, 1.46% to the upside. Biggest loser is wheat, 1.28% to the downside. And for those of you that follow commodities, I am seeing a lot of people say that they're like 70% of respondents to a couple of polls have said that their corn harvest this year is worse than last year. So if you're of that kind of, mind and like to trade commodities, you might look into grain futures over the next coming, because some of these things have been dropping pretty readily. And I'm wondering if we don't see an increase in prices on the commodities markets after USDA reports come out with their final report on the harvest in the United States. Just saying. Live cattle up 0.15. Lean hogs, wow, 3 points to the upside. Feeder cattle are up 0.5. The S&P is crawling sideways. NASDAQ is down 1/5 of a point, but the Dow is up 1/3, and the S&P Mini is up 0.6%. $109,680 after losing another couple of grand last night. We are now at a $2.19 trillion market cap for Bitcoin and can only purchase 28.9 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,926,282.42 of. Pausing to say, why do I do that? Why do I tell you what the money supply is every day? Because I can. Because anybody can. Anybody that runs a node knows exactly how much Bitcoin is out in the wind, right? And it's important for us to do an audit every single day on the only thing that you can do an every single day audit of, and that is Bitcoin. Everything else basically blows chunks. Average fees per block, 0.03 BTC on a per block basis. There's a lot of blocks. There's a little bit over 70 blocks carrying 209,000 unconfirmed transactions. And right now, fees are actually kind of high. 7 Satoshis per VByte gets you in for high priorities and 5 for low priorities. And hash rate is chilling out at 1.05 zettahashes per second. So we are still in the zettahash range. Not bad, not too shabby. Okay, from UX, UI, which was yesterday's episode of Bitcoin, and I got progressively worse with a row of ducks. 2222 Satoshi says, keep doing what you do, Mr. B. For anyone that's interested, next week is the second R Soil online conference. That's R-Soil, the letter R, dash Soil online conference. 5 days of speakers hosting a fistful of topics, all revolving around soil, plants, microbes, permaculture, and more. Free to sign up and partake. Some familiar faces that most of us know will be there as well. Nigel Palmer, Jack Spirko will be there. Chris Trump, John Kempf is going to be there, and Ray Archuleta is going to be there. Oh my God, this is fucking awesome. Dude, Maurice Diaz is going to be there. That's just some of the names that are on the roster. Go sign up at www.r, the letter R, -soil.com. That's r-soil.com. Life's a garden. Dig it. I am so signing up for that. In fact, before I forget, I gotta look at this thing. Hold on, because this, if you guys don't know who if you're a soil nerd and you don't know who Ray Archuleta is, you got to find out who Ray Archuleta is. He's retired now, but he was at, USDA has a subsection that is usually attached to universities, and I think it's NRCS, something like that. He's one of the first people that truly understood what we were dealing with when it came to soil, right? So, second annual R Soil Conference, October 1st through the 5th. It is a free online conference focused on soil. Everyone relies upon soil. Let's see. You are all invited. There's 30 speakers, 5 days. It's all free. 6 talks per day plus live panels, daily talks and panels, questions and answers, daily live giveaways. Holy smokes, dude. This is absolutely amazing. Let me see if let's see. Okay. So here's the deal. Free. You can watch all week free. You can watch the videos all week long. You can join live panels and giveaways. Includes replays all week and weekend. Includes community access. Or you can re-listen and rewatch for $99. So for the free, you have to watch it during that week and you can't replay them. For $99, it seems like you can keep them. Lifetime streaming access with that $99. If you want to do a deep dive, it's $200, it's $199. It includes everything plus a goodie bag, t-shirt, all kind of exclusive 30% discount code for regenerative soil conference or course. All kinds of, man, this is absolutely amazing. I'll try to make sure that I remember to put this website into the show notes for you guys. Oh man, I'm really excited about this. BTC on board with 100 sats. Lots of emojis that I can't read because, yes, my operating system is that old. And you know what? I don't want to hear it. Two angry cunts with a row of sticks says, sending some V for V your way. I always enjoy your concise and direct perspectives on the many rumblings within the noise of BTC. Thank you, sir. From a dame. Pies with 121 says, thank you, sir. I enjoyed hearing you on the @Bugle_News Boys LFG. Yes, I was on Bugle News. It was a lot of fun. It was a lot of fun, man. I just wish I had had an extra beer on me when I was doing it. Code with 500 sats says nothing. And I believe that's it. Yep, that's it. That's the weather report. Welcome to part 2 of the news you can use. Satoshi needs you. Bitcoin advocates issue call to action to protect peer-to-peer rights. Frank Corva, Bitcoin Magazine writing. After the less than ideal outcomes of this summer's Tornado Cash trial and the Samurai wallet case, it's more important than ever to protect peer-to-peer transaction rights. This is why the Bitcoin Policy Institute has joined forces with Save Our Wallets, Coin Center, the Bitcoin Design Foundation, and regional Bitcoin hubs throughout the United States to launch the Satoshi Needs You campaign. The initiative aims to catalyze Bitcoin enthusiasts from coast to coast to reach out to their elected officials to request that they support the provisions from the Blockchain Regulatory Certainty Act that were included in the most recent version of the Senate version of the Clarity Act. The draft of the bill provides robust protections for developers and providers of non-custodial crypto technology, as well as protections for everyday users who utilize non-custodial Bitcoin and crypto tools. And without such protections, Bitcoiners could lose their right to transact with Bitcoin freely, and we could see more developers put on trial for creating non-custodial crypto technology. Quote, "This is a moment of great danger and great opportunity for the Bitcoin network," said Kyle Onley, co-founder of SaveOurWallets.org, in a press release shared with Bitcoin Magazine. Quote, "We can't take anything for granted until our fundamental rights to economic liberty in the digital realm have been codified into law. We need every Bitcoiner to get involved, contact their representatives in Washington, D.C., and ensure this Congress continues to execute on Bitcoin policy. Quote, "We have a responsibility to fight for our freedoms, like the right to transact, and to pass those rights on for future generations," he added. So, please don't hesitate. Take action immediately by heading on over to SaveOurWallets.org. That's SaveOurWallets.org. SaveOurWallets.org to learn more about the Clarity Act and to obtain contact information for your senators so that you can get in touch with them and tell them to support the most current Senate draft of the bill, particularly Section 109. Section 109. On to Deutsche Bank. Bitcoin to join gold on central banks' balance sheets by 2030. This is Alex Larry writing for Bitcoin News. Bitcoin, once considered a wild gamble, is getting recognition from one of Europe's biggest banks. In a recent report, Deutsche Bank said it believes Bitcoin could join gold as a strategic reserve asset on central banks' balance sheets by 2030. The German bank compared Bitcoin's current path to gold's journey to acceptance in the 20th century. Quote, "History appears to be repeating itself," Deutsche Bank researchers wrote. Quote, "Like Bitcoin, gold was once subject to skepticism, suspicion, and demand speculation. A key argument from the bank is that Bitcoin's notorious volatility is decreasing. In August, Bitcoin's 30-day vol fell to historic lows even as the price hit an all-time high above 123,500. Quote, "This combination suggests we may be witnessing the start of a gradual decoupling between Bitcoin's spot prices and volatility as the crypto's integration into portfolios is maturing, Deutsche Bank analysts said. The bank noted that lower volatility plus more regulatory clarity in major markets like the US, UK, and EU could help Bitcoin shed its speculative reputation. Marion Labor, a Deutsche Bank research analyst, went so far as to say she could see Bitcoin becoming digital gold in the next few years. Deutsche Bank reports consistently say Bitcoin will not dethrone the US dollar as the world's reserve currency. The dollar is still the biggest part of the central bank's reserves, down from 60% in 2000 to 43% in 2025. Instead, the bank sees Bitcoin and gold coexisting as complementary assets. Quote, there is room for both gold and Bitcoin to coexist on central bank balance sheets by 2030, analyst Marion Labor and Camila Saison wrote. And then they talk about gold hitting an all-time high. Okay, yay. So I would normally be skeptical if it wasn't for the fact that Alex Larry put a URL into this news piece that links directly to the Deutsche Bank report itself. That URL to the Deutsche Bank report itself will be in the show notes. It will be in the show notes. And I've looked at it, and it looks like Alex is basically above board here. He's saying sort of what the report is saying, and they get to it very, very quickly in this report, by the way. It is a long report. All right. So it's like several pages long. And if you want to wade through the whole damn thing, that's fine. I'm just saying I've looked at it, and I am in agreement with Alex Larry. Deutsche Bank is saying that central banks could be putting Bitcoin in their reserve by the year 2030, which would be interesting to see, but we'll have to wait and see. Helen Parts, Cointelegraph, UK finance pilots tokenized sterling deposits with 6 major banks. It's a pilot program, but 6 major banks are involved. UK Finance, a trade association representing 300 financial service firms in the UK, has launched a joint pilot project for tokenized sterling deposits. Wow. The trade group began the pilot phase for the tokenized deposit project, which aims to provide a digital representation of traditional British pound commercial bank money, announced on Friday. The pilot was launched in collaboration with 6 major banks operating in the UK, including Barclays, HSBC, Lloyds Banking Group, NatWest, Nationwide, and Santander. All of those banks are massive banks. They are not Bob's Backyard Bank. Barclays is massive. HSBC is massive. Lloyds Banking Group, probably the oldest bank in that list. Talking hundreds of years old. The pilot was launched, UK Finance plans to run the pilot until mid-2026 and aims to explore benefits to customers, businesses, and the UK economy, yada, 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 yada. UK Finance's GBTD, which is, I guess, the Great British Tokenized D. I don't know what D would stand for, but that's this tokenized sterling shit. Infrastructure will be provided by Quant Network, a UK headquartered platform specializing in blockchain interoperability. So, yes, it's tokenization on the blockchain. Quant's involvement builds on its successful delivery of the first phase of the Regulated Liability Network, a UK-led initiative for shared ledger-based financial market infrastructure, which UK Finance launched in 2024. The RLN project engaged all 6 banks participating in the GBTD initiative, along with other major financial institutions, including Citi, MasterCard, Central Chartered, Virgin Money, and Visa. Again, a whole group of people that are rather large players in, well, money. Has 3 major use cases. The GBTD project will test 3 main areas: online marketplace payments, remortgage procedures, and wholesale bond settlement. According to Quant founder and CEO Gilbert Verdian, The project goes beyond improving payments and is about enabling new forms of programmable money that will, quote, fundamentally transform how value is moved and managed. Online marketplace payments. Programmable payments designed to reduce fraud and boost confidence between buyers and sellers. Remortgaging processes, streamlining property transactions, improving transparency and mitigating conveyancing frauds. Wholesale bond settlement, accelerating clearing and settlement of digital assets through instant delivery versus payment with a single pool of liquidity. Quote, our involvement underscores Quant's leadership in digital finance as we work alongside the UK's leading institutions to build the infrastructure powering tomorrow's economy. Suit speak. Dude, get it away. UK finances tokenized deposits pilot launched amid the Financial Conduct Authority finalizing its crypto regulatory framework, with the full regime reportedly expected to come into effect in 2026. In April of 2025, the UK Treasury published a policy note on future financial services regulatory regime for crypto assets, highlighting a clear distinction between qualifying stablecoin and tokenized deposits and electronic money. According to the report, the Financial Times on Sunday, the FCA has been speeding up crypto approvals in response to criticisms recently as the UK inches closer to adopting a full regulatory framework next year. In the meantime, the European Union has been steadily advancing the application of the Markets and Crypto Assets Regulation, which entered full force in late 2024. These are some heavy hitters. And what I think is going on is that the UK may be looking at the possibility of somehow or another hybridizing the CBDC concept with the stablecoin concept. I would not touch this product with a 10-foot pole. I would not plan on ever using it. If you're listening to me in the UK, watch out for this. This is like, it just screams Trojan horse. It looks like a stable coin, but I guarantee you it's not going to be a stable coin. It's gonna have all kinds of locks and gates and door keeping around it to where, transactions can be reversed. You can only hold so much. It's the great pound, but it acts like a stable coin. These are all things that you've got to watch out for. All right. If for whatever reason you want to use a stable coin, I don't know, just go use Tether if for whatever reason you need a stable coin, but it's all moving that way, which brings me back to Frank Corva's plea to get involved and make sure that peer-to-peer transactions are always safe. Because the people that are in power, no matter what government they're involved with, I think they're all kind of sick in their head. And maybe they didn't mean to be that way. Maybe they didn't mean to become the people that they are. Maybe it's the environment that they're thrust in that forces them somehow to become the very thing that humanity should rail against. But we've got one more thing to cover before we leave for the week. Bitcoin miner Cypher signs a $3 billion Google-backed AI hosting deal for the next 10 years. Cypher Mining, the fourth largest public Bitcoin miner by market cap, unveiled a two-pronged strategic financing and expansion move on Thursday, centered on its growing high-performance compute ambitions. The company said it signed a 10-year co-location deal with AI cloud infrastructure firm FluidStack to simultaneously propose a private offering of $800 million in, you guessed it, convertible senior notes maturing in 2031. Under the FluidStack agreement, Cypher will provide 168 megawatts of critical IT load capacity, which is supported by its 244 megawatt gross capacity at its Barber Lake development in Colorado City, Texas. The contract carries an estimated value of $3 billion over its initial term, with options for 2 5-year renewals that could raise the total to about $7 billion. Google will backstop $1.4 billion of Fluidstack's lease obligations, according to a statement, in exchange for warrants that will allow it to acquire approximately 24 million shares of SoapMiner stock, equivalent to about 5.4% of the pro forma equity in return. Cipher retains full ownership of the project. However, quote, "We are thrilled," probably suit speak, "we are thrilled to be working with Fluidstack to develop HPC data centers, and we look forward to welcoming Google as an investor in Cipher. This transformative transaction reinforces our HPC momentum as we continue to attract attention from our large and growing pipeline of sites. We believe this transaction represents the first of several in the HPC space as we continue to scale our capabilities and strengthen our position in this rapidly growing sector," said Cipher CEO Tyler Page. Concurrently, Cipher announced a proposed private offering of $800 million in convertible senior notes due October of 2031. As if we don't have enough convertible senior notes floating around there, the notes won't bear interest and will be convertible under certain conditions into shares, cash, or a combination of the two. Cipher also expects to grant initial purchasers a 13-day option to buy up an additional 120 million shares $120 million in notes, rather. Cipher intends to use the proceeds for multiple strategic purposes, including funding the Barber Lake project build, supporting its broader 2.4 gigawatt HPC pipeline, and expanding other site development, the firm said. Following the news, Cipher stock jumped 22.4% pre-market on Thursday before correcting itself, and CIFR, I guess that's the ticker, is currently changing hands for $14.95 at a market cap of $5.6 billion, having gained more than 192% year to date, according to the block's Cipher Mining price page. So Cipher Mining getting into bed with Google for AI, and at least, you know what I didn't hear? That they were going to use it to buy Bitcoin to put on their balance sheet because they're turning into a strategic Bitcoin treasury company. Thank God, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.